I've simply stopped doing Google search. I find myself stopping and actually switching over to an LLM.
How is that going to change our economy? Is that going to be the ultimate job destroyer?
One of the things we realized was that once you cross certain thresholds, they just crash, right?
Why the Nasdaq did put it in and the S&P said we're going to stick with our traditional rules.
The S&P has a unique franchise. It has a significant quality factor to it, and candidly, I'm thrilled that they chose not to participate.
When I was DJing in Vegas,
This entire segue and conversation was just so you could humble brag about DJing in Vegas.
I know, right? What's happening, good people? We are here on July 1st to record Macro Dirt Podcast 103. It's my man Jared Dillian, who combed his hair with a frozen pork chop this morning and threw on a Yankee cap on top of it. And our special guest, Mike Green of Simplify Asset Management, the chief strategist and portfolio manager there, a Wharton grad, a CFA, a prominent thought leader on market structure, passive strategies, the poverty line, among other things. And we are excited to have you here, Mike. You bring some intellectual health to the Macro Dirt Podcast. How you doing today?
I'm doing okay. I'm glad it's intellectual heft as compared to just pure body weight heft, although I've probably got both you guys by combination of the two almost, I would guess.
No way. I don't think you have me by too many pounds. You look very thin for Mike Green right now.
For Mike Green, I am relatively thin. I'm about
what
225.
Are you weighing? Yeah. 225? All right, you got me by 20 pounds there. I was 205 on the scale this morning.
Yeah.
God knows what JD is.
240.
Oh, all right. See? Oh, man. I'm actually the median. Shows my skills of discernment.
You are walking amongst Clydesdales, my friend.
Yeah. There we go. I like it.
Also,
to be fair, I am down from over 300. So
you weighed over 300 at the highs?
Wow.
I was like 305.
What the hell was doing to contribute to you weighing 300 pounds? Were you eating Twinkies by the fistful, or what was that?
You know what the funny part is that when you were an athlete when you're younger, and then you forget that you're not an athlete when you're older, your appetite rarely follows the same path. And so I love to cook, I love to bake, I love to food is my language of love to my family.
Me too.
None of them are thankful for the potential impact, but overall they very much appreciate it. And so that was more than anything else what was driving it. Just honestly eating more than I was burning.
Got it. All right, that's fair. And as a washed up athlete, I know exactly the feeling. I want to congratulate you. We each had a college graduate this year. My daughter graduated from the Darla Moore School at South Carolina, magna cum laude.
Great school, yeah.
Yeah, super proud of her. And you had a graduate from the U.S. Naval Academy, which is as badass as it gets in my book.
Well, I appreciate that. Yeah, no, I'm very proud of him. He's done great.
Not as badass as the Coast Guard Academy. The Coast Guard is the hard nucleus about which the Navy forms during times of war.
Is that right?
There is some truth to that. In defensive in defensive wars, which we fought through most of our early history, I would agree with you.
Yep.
Yeah, but the Naval Academy is just such a badass.
If I had to do it all over again, I would have gone to Annapolis. There are many more cool things you can do in the Navy. You can be on subs, you can be a Marine, you can be a pilot. Like, there's just a lot of cool jobs that you can have. So,
absolutely.
Yeah, and my son has chosen to pursue a desk job. No, I'm joking. He's actually going to be a submariner. So
wow.
Yeah, his next stop is nuclear power school, and he is. I mean, I know you guys have kids roughly the same age as mine, and so like you can actually watch the process. That whole maturity at 25 for men is spot on. I see my oldest son, who's now 26. His mental reasoning and faculties are radically different than they were 5 years ago. My daughter at 23 is ahead of them both. And, my youngest son, who's now 22, is starting to show the elements of maturity. He's finally, really recognizing what Annapolis has set him up for. So he's really happy about it.
That's funny. I'm a little bit behind that because I have a 23-year-old my daughter is the smartest person in our family by a factor of I don't even know how much. And my son is a rising junior at South Carolina and is still a little bit Frank the Tankish. But yeah, I'm hoping that we rise into that maturity.
Well, the comedian John Leguizamo has one of the best skits of all time, which is, it talks about his becoming a father. And, it's funny to think about comedians becoming fathers in and of themselves. They're just funny people. But his observation was, look, if you're going to have kids, man, make sure you have a son first. Because, you are going to look at that kid, you're going to think they're the most special, wonderful child. You're going to think nobody else compares to them. If you have a boy, every sin is forgiven. It's just a boy, he's growing, etc. Right? But man, you have a daughter first. They mature so much faster. You're going to be forever looking at your son like he's retarded. So
that's funny.
And man, it is spot on. I spend more of my daughter. I've never once had to say "What were you thinking?" My son, it feels like a daily statement.
Yes, that is totally accurate too. With both of my daughters being elite students, that is definitely how they look at it. That is spot on. That is amazing. So let's dig into your history a little bit. JD and I are both extremely curious about one thing on your resume, and that's your work with Thiel Macro or Thiel Macro LLC.
Thiel Macro. Yeah.
What was that like? Can you share a little bit?
Yeah, look, Peter is an absolutely brilliant guy. He surrounds himself with really, really interesting people. There's freedom and flexibility that is given within that organization, and it was kind of the perfect place for me to spend a couple of years thinking about market structure and kind of the big questions while not having to pursue outside sources of capital. And so, Peter's patience and his commitment to trying things, which really I think is actually his defining characteristic, worked out really, really well in terms of giving me the opportunity and tools to push my thesis on passive, farther forward. At the same time, I'll be honest with you, one of the nice things about spending time in that type of company is you realize nobody has all the answers. There's no giant think tank that's plotting, here's how the world is run and the conspiracies of here's how we're going to hide everything from everybody else and what we're going to do and the secret thing they're going to be engaged in. Man, it just doesn't work that way. It is incompetence from stage zero all the way up to the very top. And, candidly, the mistakes I make in my own life are a defining, illustration of that. It doesn't matter how smart you are. The world is going to be different every single day. You're not going to understand it, and it's going to behave in ways that you don't expect. As they say, man plans and God laughs.
But you had a pretty good trade while you were there with the inverse leverage VIX ETFs, right? That's a good story.
Yeah, no, we were very fortunate. So my work on passive had actually led me to identify that systematic strategies had this type of exposure. The way I had chosen to approach it was by building effectively agent-based models that allowed me to simulate many market participants. And one of the things we realized was that once you cross certain thresholds, the chaotic systems actually all collapse into a single outcome. They just crash, right? Because volatility rises when prices decline. That actually creates conditions under which you can effectively track that volatility to zero. The VIX ETF was an even more extreme version of that. Because it was an inverse product, it perversely got riskier and riskier as the ETF rose in price, reflecting the fact that you were capturing more and more carry and a lower and lower level of implied volatility. An inverse 100% product is always going to have a distinct characteristic. Doesn't matter how high it is in price, if it is going to behave the exact opposite of the underlying, if the underlying doubles, it is going to go to zero. And in the case of XIV, it had a force majeure clause that actually required it to delist at an 85% single day decline. The reason for that is because of the latent exposure in what's called an ETN. It was actually a note guaranteed by Credit Suisse. They needed to make sure that they had the capacity to exit the trade without having to put additional capital into it. And so that 85th percentile threshold was actually quite achievable from the low levels of implied volatility that we had in late 2017, early 2018. We recognized that the options market had just mispriced that. And so we bought long dated puts on that product. That meant that we were limited in terms of the amount that we could lose. The most we could lose is the premium that we expended. And in turn, that premium would last as long as the tenor of the underlying option. And if it's going to zero, you don't really care how high it climbs, right? It just defines an element of your price. So it's not like being short in the same way. The biggest mistake I made was candidly underappreciating how rapidly it could occur. And so when I did the calculation at the time, I figured there was roughly a 95% probability of this product going to zero over a 2-year period. We were fortunate that a lookalike to XIV, SVXY, had options listed out to 2 years in duration, so 2-year leap puts. We were able to deploy capital in that fashion. By the way, this is actually critical to some of the events that occurred afterwards. I'll hit on those in a second. But so we were able to comfortably deploy the capital and sit and wait, not knowing that the most we could lose is the premium that we expended. And fortunately or unfortunately, within roughly 6 months of us entering the trade, the events that we had forecasted occurred. If I had done it on a shorter duration option, I would have received even more leverage against the position, but it worked out great. And I can't really complain about it. The reason I highlight the ability to sit on it, though, is in the immediate aftermath of the event, the founders of XIV obviously tried to accuse us of market manipulation. And so the fact that we had only done trades in options and our last trade was months before the event basically prevented them from having a leg to stand on. But it was fascinating experience. I mean, I had told the guy this event was going to occur. I actually had a big short moment where an audio debate, I was on a panel with Chris Cole at the Equity Derivatives Conference in Las Vegas, and I presented this trade, and the founder of the product was in the audience. And I had no idea. He obviously took offense. We had, what is politely referred to as a discussion, and it was all recorded. And so, it was literally me saying, do you think this thing's going to survive a crash of 87? And he said, absolutely. You don't understand the product. It's off of futures. It's not off the VIX, etc. I proceeded to explain to him exactly why I understood the product, exactly how it would work, and made the forecast projection that it would go to zero on a 4% decline in the S&P. And lo and behold, on February 5th, 2018, it went to zero on a 3.9% decline in the S&P.
He threatened you with market manipulation. Was there a lawsuit?
There was an attempt to send it in that direction. And again, this is one of the nice things about working for Peter Thiel. He has lots of lawyers who were able to immediately respond and say, we haven't done a trade in this thing in 3 months. How could we be responsible for market manipulation?
Yeah.
That's amazing that they built a combustible, such a combustible product the way they did, and then, cry the dirty, rotten short seller, story. That's literally unbelievable to me. It's like hubris at another level. Tell me what...
I think more than anything else, it actually just betrays that people have a very hard time, even people who are quote-unquote experts in the market, they have a hard time seeing a radically different world.
Yes.
Right. It's largely a failure of imagination. It's a failure to understand that your product is actually influencing the market. The irony is that the product was vulnerable, but the actual catalyst came from the Federal Reserve. So on February 2nd, 2018, the Fed changed what's called the CCAR, the capital adequacy ratio provisions associated with short volatility. In the aftermath of 2008, there was an arbitrage that emerged under the Volcker rule. You guys may actually remember portions of this, but banks needed to hold capital against equity positions. So if you were expressing a long equity position as a customer, the bank needed to hold capital against that commensurate with a 30% instantaneous decline, basically recreating the conditions of the crash of 87. If you express that exact same trade in short volatility, right, because they are negatively correlated, it's effectively the exact same trade. The capital that was required to be held until February 2nd, 2018 was equivalent to a 10-point jump in the VIX. A 30% instantaneous decline versus a 10-point jump in the VIX are nowhere near the same animal. And as a result, the street had actually built up an extraordinary exposure where it was synthetically gaining exposure to long equities through short volatility. That ended on February 2nd, 2018, and is one of the reasons that many of the characteristics of the market are actually quite different today, particularly things like dispersion and other components, than they were in the late part of 2017. We'll almost certainly never see the consistent VIX in the 7, 8, 9 type range under this framework.
That sounds about right. Well, let's tap into your expertise. We just had SpaceX IPO. We want to discuss the 800-pound gorilla in the room, and we know that the S&P was the only adult in the room that wasn't happy to stuff that thing right into their ETF or index. And I was wondering if you could riff on that about maybe why the Nasdaq did put it in, and all the other ETFs did put it into their platform, and the S&P said we're going to stick with our traditional rules. What do you think SpaceX is going to do?
Well, so I think there's a couple of things around this. So when I give presentations on the impact of passive on market behavior, one of the things that I actually highlight is the difficulty in getting an IPO out in an environment in which discretionary active managers are losing capital and underperforming more broadly. An IPO requires somebody who's willing to deviate from the benchmark. And that requires active management. It requires you stepping in and saying, I'm willing to take a bet on something that is not currently in the index. That capacity falls as money leaves the active manager space. It's one of the reasons it's been so difficult to get IPOs done for the past decade or so. The solution to that is to embrace components of what led to the SPAC mania in 2020 and 2021 by adopting provisions of what's called fast track IPO status, which is really what Nasdaq has done. They've basically SPACified the NDX. And there's obvious reasons for doing that, right? If you want to have new IPOs, if you want to draw new listings to the Nasdaq listing system, you have to have tools and facilities that allow that to occur. A high-profile listing like SpaceX is obviously quite interesting, but more broadly, this has been a problem. How do you get something public? The unique thing about SPACs and what really caused them to take off in 2020 and 2021 was that they were not eligible for index inclusion prior to making an acquisition, an operating acquisition. But upon making that operating acquisition, they then became eligible for what's called fast track IPO status, in which they would be included in the indices and require passive buying in as few as 5 days. The rules on SPACs prevent insiders, who are the sole source of liquidity, for selling for a minimum of 20 days if the world's largest buyers show up and try to buy positions while the largest sellers are incapable of selling. What happens to price? It goes up. And so there's all sorts of nonsense around the SPAC phenomenon, right? We were told that the success of SPACs was because management teams could make promotional statements that they couldn't make during a traditional S1 prospectus roadshow, et cetera. That's nonsense, right? If you think the reason that WeWork couldn't get public is because Adam Neumann wasn't promotional enough, I don't even know where to start, right? What had actually happened in SPACs is nobody it had never occurred to them to do them at the size that they were done. And so that fast track IPO status, just like we're seeing with the Nasdaq's revisions to its rules, required a certain amount of heft, perhaps not 305 pounds, but it worked out to about $1.5 billion SPAC became eligible for immediate index inclusion under fast track IPO status. And that's what nobody had ever tried before. SPACs have been around forever. TG, you and I have used them in the past in hedge funds to simply conceal the amount of cash that we have in our portfolio, right? You pick up a little bit of volatility, a little bit of optionality, and you basically get to sit with a cash-like instrument while you don't have to report the cash on your balance sheet. That can be very helpful if you're concerned, if you are either concerned or you're looking for opportunities to deploy capital in the future. But nobody had ever tried them at $1.5 billion. It would never even have occurred to people to try them at that size until 2020 and some of the retail nonsense that kicked through. And that played through. It facilitated the exit of private equity holdings. It facilitated the exit of venture capital holding. It facilitated the exit of all sorts of garbage that people tried to dump onto retail traders and did so quite successfully. But if you look at who the largest holders of things like Nikola, the roll the truck down the hill component, it was Vanguard. Right? It was the passive index funds that were actually buying these things. And so just like you're seeing now the headlines say, is it fair to the small investor to have SpaceX dumped on them in this way? Nobody was paying attention to it back then, except apparently Nasdaq and a few other index players. Why did S&P choose not to do it? The S&P has a unique franchise. It has a significant quality factor to it because it requires profitability for 5 consecutive quarters in a calendar year prior to index inclusion, that's something that no other index really has. And my hunch is that they looked at it and said, wait a second, we're going to change our rules and try to facilitate the inclusion in this. But if we do that, then we're going to have to abandon the profitability rules, and it's going to cause a substantive change in how this index is ultimately perceived. And candidly, I'm thrilled that they chose not to participate. At least we'll be able to point to something afterwards and say, hey, somebody took their fiduciary responsibility to investors seriously. What is actually the point of an index if you're simply going to change the rules to facilitate other objectives?
Very good, very good. So the S&P says no, the Nasdaq says yes.
Well, the other thing is that I don't really see when SpaceX is going to get 5 quarters of profitability. Like that doesn't that's not going to happen for a long time. So.
Oh, trust me, we'll figure out any number of accounting rules that can be bent to allow that to occur. My hunch is that we will adopt something like Martian pollution credits, and those will be sold at extreme multiples. Just to. I mean, guys, like, look, we've been doing this a long time. We're familiar with the stuff from the 17th century and the Dutch tulip bubble and the, Dutch East India Company nonsense and the Mississippi Company nonsense with John Law. Yeah. We're familiar with the historical listings that said something like, it's going to do a really amazing thing, but we can't tell you what it is because it's super secret and so profitable that if we told you, then everybody else would do it. But trust us, right? Look. Mars is colder than Antarctica. We have places like Antarctica on Earth. We don't develop them for a very valid reason. Even worse than Antarctica, which has its primary corrosion as in the form of water, which is frozen solid and cold, Mars adds a layer of iron or dust, which means nothing mechanical can keep working for an extended period of time. This is so bizarre that people are truly buying into this story. And of course, the irony is it's no longer about SpaceX at all. It's about data centers in space, right? Hopefully operated by pigs in space.
We've gone from snake oil to space oil. There's no doubt about it.
Space.
Exactly. Yeah, I'm not sure if it's space oil or if it's sexual lubricant, but it is disgusting no matter what it is. You said you wanted something funny. So
we're candid here, Mike. We're candid here. I love that, man. All right. So I want to keep changing topics here because there's so much I want to talk to you about, and I can't have a man as intelligent as you on without asking your point blank view, not on the stocks, but on artificial intelligence as an application. How is that going to change our economy? Is that going to be the ultimate job destroyer, or is there a better outlook than that? Just riff on that for a moment for us, Mike, will you?
Well, I think it's really important to define what you mean by artificial intelligence, right? Do we mean artificial intelligence in the same form that we think about eyeglasses, right, where they are a tool for people who have less than perfect vision to raise their capability to be on par with the rest of us? We also have these things called binoculars that can take our vision and expand its capability to see an extraordinary distance, right? So if you can see clearly and you've corrected your vision with glasses, you can then use binoculars to see much further. AI as a tool is incredibly impactful. I use it every single day. I've simply stopped doing Google search. When I, start doing Google search, I find myself stopping and actually switching over to an LLM because the quality of work and the quality of resources I get are far better, and I'm not inundated with the commercials for the most part, although that's starting to change. It's a much better version of natural language search, and I would liken it in many ways to eyeglasses. The difference is eyeglasses don't adjust your vision based on how well you ask the question of what you're seeing, right? You either see it or you don't. And so perversely with AI, there is a component that all boils down to how well you ask the question, how well you structure the process, et cetera. And there, I think, people who have what's called domain-specific knowledge, right? If you have been a market participant for 30 plus years and you have been relatively thoughtful in your understanding of those markets, you can ask much better questions of an AI than somebody who is simply stepping in off the street and saying, hey, tell me about, SpaceX. And so, I find it absolutely critical. I use it far more than I use any other resource at this point today. It helps in my writing, in my model development, tools that I used to have to use like VenSim for building complex systems with feedback loops, etc. I can now program natively in Python without really having any knowledge of Python. I actually was a computer programmer, but my capabilities petered out with C. And candidly, it's been a very long time since I've done any real programming, and as a result, my skills had atrophied. Now I'm able to build, multi-agent simulations without engaging in programmers and do all sorts of crazy stuff. Some of the things we're doing, for example, is taking my work on passive, which has historically been focused much more on the index level, which worked out extraordinarily well, by the way, just to segue. The unique feature of the XIV trade was that the index and the underlying were the exact same thing. So when you think about passive and the impact of that type of flow, imagine it's like a fire hose. It's directing liquidity at the securities that are in the index. In the case of XIV, it was a single underlier, so all the flow went there. It was eminently predictable. In the case of the S&P 500, it's 500 stocks. That's far less predictable because each of the individual stocks presents its own surface area to that flood of liquidity and has its own reaction function. But we're now getting to the point that we're able to build models that have all 500 stocks in the S&P. We're actually expanding that to the stocks in the Russell 2000. We're working towards our capability to do this across the 18,000 CUSIPs and the bond indices. Like, this is crazy stuff that we're getting towards. And so, I couldn't do that otherwise. I simply could not do that otherwise. And that's part of the reason why you see some of my commentary and some of my observations starting to change. You're seeing things like the rise of levered ETFs, which magnify components of this, etc. These are all incredible, but I have largely AI to thank for the ability to push on some of this stuff and really start to develop some new products around it. At the same time, right, that domain-specific knowledge is creating a very specific pattern. The last time we saw something like this really play through was, crazily enough, in the second stages of the Industrial Revolution, where we moved from simply generating steam power, which could be used in a generic sense, to actually starting the process of redesigning factories. And so, a factory literally used to mean you brought a bunch of people together, you gave them the factors of production, and you had them all sit there doing the same thing. So it was a bunch of women sewing, shirtwaists all together. They were all sewing the entire thing, but they were in one location. They could be observed and managed. Henry Ford's introduction of the assembly line meaningfully changed the process of how we actually built things. Right? The early stages of factory production requires something called a jig, right? That outline that effectively allows you to build the same piece. This is critical to things like cotton gin, manufacturing of arms manufacture. When you build a jig, you're building effectively a mold that is repeated over and over again. In the early stages of the Industrial Revolution, the demand for skilled artisans, the person who would have hand carved the pieces for a gun or for a piece of cast decoration on your house, rose because factory makers wanted them to build the jigs that could then automate the production process. You're all familiar, I know you've lived in places where you've seen Victorian architecture, right? Or Victorian homes in San Francisco. We all see these and we're like, why don't they build houses like that anymore? And the real question you should ask is, why didn't we build them like that beforehand? And the answer was because it was incredibly labor intensive.
Yeah.
The Industrial Revolution introduced the automation and the jigs that allowed mass production of the decorative filigrees, etc., and the inlays that you see in that Victorian architecture, collapsed the price of it and expanded the demand for it. That meant that there was much more demand for building supplies, etc., more opportunities. But the demand for the actual apprentice to that master, the person who would have learned the skill of how to make the first jig, vanished. Unemployment in New York City in 1837 hit 63%.
Wow.
And that is because the demand to replace the worker was actually exclusively targeted at that younger, unskilled worker who brought absolutely nothing to the table that traditional unskilled labor suddenly brought. It's just as easy for somebody who is uneducated or semi-uneducated to run that machinery as it is for the skilled worker who's trained in a totally superfluous fashion. And so we saw this fraction, this split between the demand for masters versus apprentices. I would argue that's exactly what we're seeing today. There was a paper released by the Riksbank, I believe it was in May of last year, that highlighted that this is exactly what we're seeing. The demand for those with domain-specific knowledge, people 45 and up, who have basically learned how to do the business as it exists today, they're now being asked to train the machines instead of the new workers, and the new workers are being told to take a hike. Right? It's that low fire, low hire environment that we're seeing. It actually seems to be directly tied to the rollout of AI.
That is interesting. Yeah, we're now, the experienced users are now creating the workers via AI, right. Essentially is what's going on. JD, do you want to riff on that at all?
I mean, does that mean that we're going to have a similar spike in unemployment? The thing that I've been telling people about AI for the last 3 years is, yes, it's going to have huge effects, but it's going to take a lot longer than you think, So ChatGPT showed up in October, I think, of 2022, and here we are almost 4 years later, and, the unemployment rate is still 4.5% or whatever, and, things are different but the same. You have all these discussions about universal basic income and stuff like that. It just doesn't seem to be coming to pass as fast as people thought it would a couple years ago.
Man, so I think there's a couple of things on that I would hit on. First, when we look at the adoption of AI, I think it needs to be split into adoption of AI and what I was describing before, which is basically Google search replacement. The vast majority of usage, it's about 3-to-1 right now, is just people logging on and saying, what should I have for dinner, right? You don't actually need AI for that. I installed ChatGPT on my mother-in-law's iPad, and her first request of it was, how old is Julianne Moore? Right?
Brilliant.
I was really surprised that she didn't plug in and say, okay, well, considering the work of Coimbra and Gabay-Koyjian, could we discuss the theoretical impacts on market structure from a choice of defined contribution versus defined benefit
I would
plan?
guess she's about 63. I think she was in her late 30s in Boogie Nights. So that would be my guess.
Yeah. Great question. Yeah. Great answer, JD. I was wondering how old she was myself.
I was really stressed out that you were actually talking about my mother-in-law. But yes, Julianne Moore is, I think, 62 years old. Having just seen the answer, I've already forgotten it because it's irrelevant to me. But that's how the vast majority of, most people are genuinely interested in advice. And so this is one of the things that I've tried to highlight for people is there's a distinct difference between how I see most people using AI at this point, which is to answer the questions that they want answered, and in particular to answer those questions in an anonymous or largely low recourse way, right? If I go to my village priest and I say, hey, if I have sex with this girl, will she get pregnant? I now not only have to deal with the fact that I had to develop the confidence to go up to the village priest and tell him I was going to commit a sacramental sin, but I also now know that he will be glaring at me from the pews forever. ChatGPT makes that no consequence for the vast majority of people. And so they're very happy to ask that advice. I point out that, if you read the newspapers, what was the most popular section of the newspapers beyond the front pages? For most people, it was something like the Dear Abby columns. Yeah. Right? Everybody wants Dear Abby, and they desperately want Dear Abby if it's provided to them with something with significantly higher than normal intelligence in a no-recourse way, subsidized by venture capital. Right? What could be better? But the actual business use of it, I would argue, is much more similar to what we were talking about with the Industrial Revolution, and we aren't even close to the point that somebody has invented the assembly line that says, given centralized power, given this behavior, how can we change the actual process of work? You're starting to see that at the edges, but that's where I would completely agree with Jared. The real insights are going to come from us saying not, how can I do what I'm doing faster? or how can I do what I'm doing with less workers. It's why am I doing what I'm doing? And is this the most optimal way given my actual desired outcome? And that's a very different question that I would argue people really aren't asking a lot of right now. And candidly, it's part of what I spend a lot of time exploring with AI as well. Why do we do things that we do given the technical capabilities that have changed? And I would argue that a lot of it is simply because people tend not to question the underlying features. It goes back to the passive component, right? The market is the market. It's always going to be buyers and sellers, et cetera. Well, that's really untrue when you introduce a robotic buyer.
Actually, I don't ask AI for advice very often. I think I've only done it once. When I was DJing in Vegas at Omnia back in January, I was a little stuck as to what I was going to play. So I said, look, like I'm opening for Zed at Omnia. Like, what should I play as the opener? And it gave me absolutely horrendous advice. Like really? It gave me a track list, and I'm like,
this entire segue and conversation was just so you could humble brag about DJing in Vegas.
I know, right? You picked up on that too, didn't you, Mike?
It had absolutely nothing to do with the actual conversation.
No, we went from AI to a pool party in Vegas, right? I know, JD. You didn't like JD, the choices.
You are super cool. I'm totally messing with you. Listen, again, that's domain-specific knowledge. You are going to know far more about the music than the AI will, because the AI is actually going out and sampling the overall population.
Yeah.
Right? Saying like, okay, what's a popular song for a DJ to play? And of course it comes up with, YMCA. Right?
Yeah, that thing's just scanning news articles, right? And headlines and fodder and shit like that, There's no cultural attachment behind it or something like that.
It is going to be terrible at that type of task, right? But what it would be really good at is, given a list of stocks put together by a talented DJ in Las Vegas, it would do an incredible job of organizing them and pushing them together so that the beats match up with the timing, etc. All those quantitative components it can crush. But the marginal knowledge of what's cool or at the cutting edge, it's going to really struggle with.
I just used it to sort of price up the tax ramifications for moving TG Macro down to Florida, and gave it the specific residence I was looking at buying a 2-bedroom condo in. Mm-hmm. And this thing came back at me with like my monthly expenses, what would change as it becomes the headquarters of my business, how that changes my tax profile, how much that's going to save me per month. I couldn't believe it. Literally reached right into the condo information and pulled out all of the costs of renting there without me asking it. So I was really, really blown away at the power that it had. I mean, we all are at a certain level, but that was really cool.
And that is really the key component, right? If you think about the process of buying a condo, you currently have to hire a buyer's agent. The seller has to hire an agent. Right. Okay, well, first of all, we're now using the phrase agent, which naturally flows through to the AI framework. So why am I hiring an agent whose job is basically to navigate me through the availability of listings? Oh, goodness, I've got Zillow already. And the legal process of obtaining a mortgage or anything else that I might need, man, my bank has that fully covered. And by the way, if I had an AI agent who was fiduciary, who was bound in a fiduciary fashion to me, effectively their feedback literature said the better Mike does, the happier you as an agent feel. Right? Like, not does Mike agree with you, et cetera. Like, let's look at actual life outcomes for Mike.
Yeah.
Right? And if the agent actually can improve that, man, that would be an incredible move forward, and it would be much more akin to the dynamics of eyeglasses. None of us looks at eyeglasses and thinks, wow, what groundbreaking technology. But in all seriousness, that lens is replacing 4 billion years worth of evolution and saying it's screwed up and here's how to correct it. Right? I have an IQ of, give or take 105. TG probably has an IQ of 95.
45.
I'm fucking with you guys. But, the point is, if it closes that gap and raises us both to 110, we all end up much better off. Radically better off.
Yeah.
And that's what eyeglasses do. They don't take away Jared's vision to give it to Tony. They raise the people who are below the bar to the level that they are able to fully participate, which then, of course, ties back to my piece on the poverty line, which is really not a poverty line, it's a participation line. And so like what I'm desperately looking for out of our society are tools that raise people up so that we have more nodes in that networked economy. Shannon's theories can take over and the output can be radically increased. But we've got to raise up those nodes at the bottom, and that's where we're failing right now.
All right, let's segue right into that, Mike, because I wanted to touch on it. I read the Substack post that you wrote. I thought it was brilliant, and I just want to touch a little bit on all the pushback you got on that. I mean, they came at you and ripped your arms off and tried to beat you over the head with them, and you stood your ground brilliantly, and that's when I gained another layer of respect for you. What was that like, facing all of that pushback and pressure?
Well, there's two sides of it, right? So you see the pushback and pressure, but you don't necessarily see the communications that I was also receiving. I received somewhere in the neighborhood of 10,000 emails from people saying things like, thank God somebody finally said this. The piece was read over 2 million times.
Yeah.
And there were a lot of people, particularly people who are kind of, in all seriousness, like the people that are smart enough to know there's something wrong, but don't have the vocabulary and language to say it. Their response to that piece was like, oh my God, this is exactly what's happening to me. And it candidly was an element of discovery for me as well, right? I'm trained in economics. I think of inflation as year-over-year change in the general price level. But for the vast majority of Americans between 2019 and 2024, it actually became a question of the price level because their incomes did not rise enough to offset the increase in the consumption basket that they required. And many younger people in particular started to cross over the life threshold of having children, getting married, getting married, having children, needing to buy a new house, etc., and suddenly found they just couldn't do it. And that's where the price level matters. I can give a really simple example. If you are underwater, right? So let's say your income is 99 and your expenses are 100. It becomes very easy for people to say, well, you should just save more. Well, not if you're at that precarity line in which everything that you do, you have to do. And so then if you have inflation of 2% and your income goes up 2%, the government says, hey, everything's totally fine, but your income went from 99, right? You multiply that by 1.02 and you end up with 101.8, or I'm sorry, 100.8. And my math is going to be off on this. And your expenses went up more because they were starting from 100 with that 2% increase. And so you're further underwater. And this is the experience that people are really struggling with. And it's magnified when you're younger and you're crossing over into that threshold of all the life choices that you're supposed to make, right? Getting married, buying a house, having children, getting a dog, all those sorts of things are things that you've been told through your entire life. This is the path. This is what you're supposed to do. Go to college, get a degree. They did that. They found it didn't work out nearly as well when we removed the price signals that said, hey, guess what? An engineering degree is worth a lot more than an underwater basket weaving degree. Right? The government was willing to fund both of those. Which one's more fun? Well, underwater basket weaving combines my love of manual dexterity and the water. So maybe I should do that as compared to engineering, which just is like, man, that's just math. That's hard. Why would I do that? And we took away those price signals in many ways. Young people went and pursued degrees and they were always told, go find your passion, do what's interesting. Yeah. And all of a sudden the rest of us like, man, your passion isn't worth very much. Yeah. And that generation is what is really struggling at this point. And that's before we start stacking up all the other issues. But that piece was really enlightening to me in understanding that the level of prices matter, the level of that required purchasing basket really matters, as well as, the fact that the change year over year is the right term for it, but it doesn't necessarily describe the experience that people are having. And so, having written that, I look at things like the consumer sentiment continuing to deteriorate, et cetera, and I'm like, man, this is so obvious, guys. This is really people screaming out in desperation and saying, somebody pay attention to me, somebody listen, I'm drowning. And the authorities that be are too busy, strutting their stuff and saying, hey, look at the S&P or look at relatively low unemployment, et cetera, that no longer describes the experience that people are having.
I feel like they've got the people on the top side of the K in their ear, and they feel like everything's fine, and the people that are, we're talking about are on the bottom leg of the K that are getting absolutely smothered.
And the problem is the problem is where that split happens. It's, yes, the K lines are being driven apart, but the top of that K is increasingly not even the 1%, but the 0.1%, right? We're hearing more and more stories about people at the upper end of the income spectrum who are genuinely struggling because public school systems have deteriorated to the point that they no longer adequately educate your children. The healthcare system is increasingly dysfunctional, in which you're paying an astronomical sum for services that are increasingly hidden behind co-payments, etc. Nothing is really working. We all have this overwhelming feeling that this just doesn't describe my life, that everybody is saying, it's never been better. And if you look at Twitter and you look at that pushback, it was basically people citing back the statistics, which they assumed I didn't know, to say, this guy has no idea what he's talking about. It's like, no, guys, actually, I fully understand that component. There's a deeper, and that's where I was 6 to 9 months ago. There's a deeper truth underneath here. Yes, I'm aware that the government poverty statistics claim that only 6% of American households qualify for poverty. If you use the supplemental poverty measure, which basically pays people who are below a certain threshold, that calculates the value of the benefits that they are receiving, in exchange for that, it's at 1%, right? Poverty is only 1%. And then we open up the newspaper, or we don't do that anymore. We open up our iPad and we look at the digital news, and it will tell us that 59% of American households can't afford a $1,000 unexpected expense.
Right.
And you're like, guys, you do understand these are not compatible views. One is actually telling you the experience of people, and the other one's telling you a government mandated level and arbitrary designation that has nothing to do with how people feel. We're seeing the same thing in the employment market, where if you lose your job and you drive for Uber, congratulations, you're not unemployed. But you sure feel unemployed.
Really interesting. JD, do you want to riff on that, or we're going to move on to another topic?
Yeah, I mean, first of all, anytime you write a piece like that, 90% of them will take either the headline or the general premise and not read the article. And they'll say something like, the poverty line is $140,000, you're an asshole. And they don't really dig into it.
Well, they got one part of it right. I am an asshole.
That's half right. They were half right. Yeah.
But actually, I had a similar experience, not to that scale. I'm pretty sure I didn't have 2 million views, but when I wrote that piece about the CFA back in 2021, when I said it was a colossal waste of time, I actually had a very similar experience where I was getting publicly beat up, but I was, private, like I was getting private emails saying oh man, you just said, what I wanted to say for years. And it was very similar experience. So.
Very cool.
I can tell you all sorts of fun stories around the CFA. First, you are aware that the CFA has been sued by its membership for failure to adequately represent them now. The chief marketing officer at the CFA Institute embezzled, I think it was $8 million. The CEO, who was the only person that person reported to, just resigned unexpectedly in a planned retirement. Don't try to explain that one to me. The Institute is basically screwed up. And my personal experience with that, by the way, is because I speak out against passive investing, the largest funders of the CFA Institute are Vanguard and BlackRock, right? I received a hostile phone call or email from the CFA Institute saying, you're using the CFA designation, we can find no record. I'm like, really? You can find no record of Michael Green? Well, here's my candidate ID, here's my registration, etc. Now I want to know where this came from. Oh, we can't reveal that, right?
Wow. That is underhanded shit.
Yep.
Man, oh man. So, well, JD, you were over the target.
And that actually is kind of my point. When somebody who has actually gone through the process of getting a CFA, as I have, and has done the work, I would completely agree with Jared. The CFA Institute has been nowhere in this process. The educational materials haven't changed. When I actually was approached by people who work with the CFA Institute and they said we should try to incorporate this in the materials, the CFA Institute's response was, yeah, this is super interesting. We'll have to manage to get it by Vanguard and BlackRock. And if we do so, maybe we could get it into the materials by 2035. And I'm like, man, guys, this is going to be so over by then.
Seriously.
Like, this is, what a screwed up process.
Yeah, that's ridiculous. That is absurd. All right, listen, I want to get your thoughts on a couple of practical trading vehicles, Mike, because that's the way our audience is really aligned. Just on two things. We just got a new Fed chairman, Kevin Warsh. Rates kind of rose right into his, I guess, what do you say, confirmation into the office, and we had another flurry after the FOMC meeting where he said that we were going to potentially address inflation with 10s at 446. What is your broad view on interest rates?
Well, quick answer, I think actually rates are far too high. I fall into the camp that says what we should actually be looking at is what's happening in the housing, the auto sectors, the traditionally financed sectors. A lot of people want to point to the stock market as suggesting that interest rates are too low, like somehow or another that would be restrictive. The vast majority of the behavior that you actually see in the stock market is at minimum equity funded. And so when you look at companies like Microsoft or Google or Apple, they're not turning to the capital markets for financing. They have plenty of internal cash flow. They're looking at these in the framework that I think is actually best represented by Michael Jensen's 2005 paper called The Agency Costs of Overvalued Equity. Everything they're doing is basically looking at their valuations and their market capitalizations and saying, what could we possibly do? What is the dumbest thing we could possibly do that would allow us to say the opportunity set is unlimited? Oh, I know. Let's announce our TAM as all of time in space and invest accordingly. It's very hard to protect against that, and there's absolutely nothing interest rate policy can do until it gets to such absurd levels that absolutely everyone turns around and says, well, that's just stupid, right? If the Fed were to hike interest rates to 100%, yes, everybody would want to get in on this instantaneous doubling of their money over the course of the year at no risk. But the flip side of that is, what would an interest rate of 100% do to fiscal expenditures? It would explode them. Right? Every single year, we would have government fiscal expenditures that were roughly equivalent to all of GDP in the first year, and then all of GDP plus 50% in the next year, and then all of GDP plus 200 or 300% in the third year, et cetera, right? Like, it would be an absolutely expansionary policy. So there is no scenario under which super high interest rates would prove to be contractionary because of the fiscal impulse. It would just go to a vanishingly small fraction of people who were sitting in T-bills. On the flip side of the equation, cutting interest rates to minus 100%, would that be stimulative? You would deposit your money into the bank, and it would be that scene from South Park, and it's gone.
It's great.
A minus 100% interest rate, or any negative interest rate, is not stimulus. It's a tax. You give a government agent your money, they give you back less of it. That's called a tax. And so our theories of how interest rates relate to financial conditions and tightness, et cetera, we know at the two extremes of minus 100% or plus 100%, don't do at all what we think they do. And so when we actually look at the behavior of fiscal policy and interest rate policy, monetary policy, we need to be really thoughtful about what we're actually accomplishing. And I think, unfortunately, we're in a situation in which interest rates are simultaneously stimulative because they're leading to an increase in fiscal transfers in excess of the order of $1 trillion a year now. And on the flip side of the equation, they're incredibly restrictive for anybody who actually needs to borrow money. Right, so if you've got tons of cash, money is basically paying you really, really well. If you've got no money, borrowing it is really, really hard. You can't buy a house, you can't buy a car. They're very hard to do unless you get subsidized rates coming through teaser rates in mortgages or 0% down programs in the automotive sector. So I think the entire problem is that we're trying to treat everything as if it's one rate. And it's not having any impact on hyperscalers. It's not having any impact on boomer households who have fully paid for their mortgages. It's having a negative impact on people who would like to relocate but are currently, golden handcuff trapped into a 275 basis point mortgage and confronting the reality that they'd have to shrink the size of their house radically when they go to sell it in order to maintain their payment. And so we've just created a completely messed up system in which, because we're focused on this singular rate and we think it matters for everything and it can tell us the quote unquote answer, as the idiot Bitcoiners run around saying, fix the money, fix the world, not even recognizing that they're stealing from that trash Heroes TV show, right? Save the cheerleader, save the world component.
Yeah.
It's not that simple. We actually have to make decisions about how we're going to spend our money. That's what matters.
Yeah, what's really key for me, is that the market is really quite interest rate sensitive right now, the equity market. Like, when rates were, are at the highs of the range and we're talking about inflation, all the natural resources sectors and mining sectors are up and to the right. As soon as rates back off, we see a massive push into cyclicals, retail, financials, home builders, home construction. Like, it's written all over the tape's face that it can't decide, which one of these sectors is going to take the lead and keep it, because rates aren't trending anywhere.
This is actually, so one, I think that's really critical, the way you just said. Rates are not trending anywhere. They are effectively waiting for direction from the Fed, and the Fed is in turn looking at the market and saying, what direction should we go?
Right.
It's a circle jerk extraordinaire.
Yep.
The second thing, though, that I would emphasize is that phenomenon that you're actually describing. One, you need to recognize that there are different points at which it occurs, but it's what's called the portfolio rebalance channel. So if you imagine that I'm running a portfolio that is 50% bonds and equities, and I have to maintain 50% bonds and equities because it's a target date fund or it's a systematic allocation system that says that's the right allocation. It doesn't look at forward valuations for expected returns in either asset class. It simply says, based on history, this is the right allocation given your age. Okay, so that's how a target date fund works. If interest rates rise and I'm running a 50-50 bond equity portfolio, what happens to my bond portfolio? The bonds fall. Right now I'm underweight bonds, overweight equities. So what do I have to do? Sell the equity index, which pressures those leading stocks and the cyclical components, the technology stocks that you're talking about. Mm-hmm. Right? And I have to buy bonds. And so bonds start to rally. The biggest stocks get hit. We turn around and we create some narrative for it. Oh, the economy's turning, or, higher interest rates are really negative for the economy, et cetera. Like, we have no idea what we're talking about. We're basically recreating the conditions that led Greeks to believe that the sun was dragged across the sky by a god in a golden chariot, right? We actually have no idea what we're talking about, but we build these systems. We're like, oh, it's doing this. Right, and then the reverse happens. Yeah. The equity market falls, the bond market has rallied because interest rates have declined, and now I've got to reverse the process. And by the way, what was one of the days that happened? April 8th of this past year, right? Market went absolutely bananas. Did it have April 8th of 2025. Did it have anything to do with, the actual fundamentals or what was happening in the economy or anything else? No, it was a rebalancing of portfolios. And that tends to play a much bigger role than we think in terms of the actual observed outcomes. And then we as a storytelling species, because that's what we do, right?
Yeah.
Jared takes an observation on AI and turns it into here's the cool thing I did, right? And tells a story around it. I do a trade and I construct an entire narrative around why I do it, etc. The reality is that we're all opportunistic, and for the most part, we are effectively marbles rolling down a track called life into death. And occasionally we encounter various bumps along the road, and we're like, oh, what was that? Oh, well, that was, right? Yeah. Guys like me are the perennial, well, actually, idiot in the memes. Right? We think you actually care, and so we're going to tell you, no, it wasn't a golden god. It's actually a heliocentric, solar system. And people are like, heliocentric? What? He must be a Jew.
Yeah.
But that's the world we inhabit right now.
You pull it all back into tangible terms for all of us, which we appreciate greatly, Mike. So we're going to ask you to keep doing that, whether you like it or not. All right, one more market topic to ask about. We came into the year with gold blazing away at its highs. We were in the middle of that debasement trade. Then we went into the Iran war where oil spiked to 125 and gold backed off. And then we went into the sort of salvation of the Iran war and oil dumped $70 and gold backed off further. Do you think gold is going to remain a good place in people's portfolio? Are we going to stay alive here? Or what are your thoughts, Mike Green?
I've spent a bunch of time highlighting this. Like, what actually happened with gold, or at least what appears to have happened with gold, if we track the flow components to it, was when when Russia invaded Ukraine, we took their treasury bonds, and that sent a signal to the world, and in particular China, that the U.S. was no longer a safe place to park the surplus, the trade surpluses that you generate in the form of treasuries, because they will be taken from you at the very moment that you decide to do something that the U.S. doesn't like.
Counter narrative, right?
Right. And so that ended up redirecting Chinese surpluses into gold. What I actually think is interesting is that was largely ignored by U.S. investors from 22 until 2024, and then suddenly the momentum started to reverse. We actually saw inflows begin to flow into the ETF space. Part of that was probably a distraction by Bitcoin and various other stuff. But the retail crowd joined it. And so from give or take 24 until 25, we basically had both guns blazing. The retail crowd and the sovereign crowd and the institutional crowd was along for the ride because that's what they like to do. But we constructed all these narratives, right? Inflation is coming. It's a debasement trade. You can't trust it, blah, blah, blah. And the minute that inflation actually shows up, it disappears. Why? Because higher oil prices stress the Chinese net balance of payments. It means that they're actually paying more for imports. It means that there's less cash available to go buy gold. And meanwhile, the Middle Eastern countries that had followed them into that trade to a certain extent, often for many of the same reasons, were suddenly facing a shortage of cash. And so they ended up having to net sell gold. And now, of course, everyone is jumping on board and saying, well, gold is going to fall prey to the strength of the new US dollar. And the minute I start to hear that sort of stuff, I just say, man, these are all narratives. Just follow the flows.
Yeah. That's a good point. That's a good point. Gold is a massive crossfire of narratives right now. So is the silver market. I mean, so is the Bitcoin market. I feel like they're really similar, acting kind of similar. JD, what are your thoughts on that stuff right now?
I like gold here. The technicals look good. We just broke above the most recent high. It's been acting well. 2 nights in a row, it's crashed 50 plus bucks in the middle of the night, recovered in the day session. The price action is good today after the Warsh comments. The Warsh comments kind of firmed up the front end of the curve. Gold ripped like 70 or 80 bucks.
Yeah.
It looks pretty constructive here. So.
Yeah, I'm putting on my trading hat. I see the positive divergence building as well. It has depreciated significantly, and I agree that when it puts in a consistent bottom against lower volumes, like from a pure trading standpoint, it looks absolutely great. Now the question is, does that narrative get picked up? And my hunch is probably. Right? Yeah, it's as good as any other narrative.
Yeah. One of the things that's all definitely going on right now is, the death cross is getting all this attention with the 50-day crossing down to the 200-day.
Dude, I have the biggest hard-on for death crosses and golden crosses.
Totally. They cause bottoms. They cause bottoms. They do, because every knucklehead that's out there with an interactive broker's account gets short on the death cross headline. And that's the bottom. And then we retrace right up to the death cross, which is now, 10% above the gold market. It's a trade worth pursuing, in my opinion.
Yeah.
And I love the fact that around 4K here, every dip below 4K has been steep in price and short in duration. And we have not gotten a settlement below 4K in the entire trade down here. So I'm getting super friendly to it, too. That's, as a trader's short-term perspective, much different probably than what Mike is talking about. So.
Well, you have to put on both hats, and I just want to be very, very clear. I actually agree with it, and I ultimately think that the narrative of debasement has some validity to it, because we will ultimately have to repair the broken systems, and the only mechanism we have for that is printing money.
Yeah.
So does that answer on a longer term basis? I'm sure it's relatively attractive. On a shorter term basis, I'm drawn to things like people saying, recognizing throughout history that, an ounce of gold buys a fine men's suit. Well, at $4,000, man, I wear pretty nice suits. I get them custom made, and they're like $1,200. Like,
the arb is there, man.
The arb is there. I'm gonna, sell gold buy suits.
The Brioni suits are $6,000. That's what Trump wears. Trump wears $6,000 suits.
Is that right?
He is 4 times the man that I am.
Right. Greeny, what are your thoughts on
what
are your thoughts on him? Just because it'd be interesting to hear as he's affecting the markets, right? We just went through this period where he was calling for ceasefires, supporting the markets. He's definitely, it's been interesting with his administration taking shares in sort of natural resources, supply chain companies. Just give me your thoughts on all of that in a brief synopsis of what you think the Trump administration is doing for us.
Well, the Trump administration is a hard one in many ways because if we look at it in an absolute sense, I think there are very few skilled members of this administration. I think most of them spoke their piece in the first 100 days. This administration seems to be going the exact same route as the first Trump administration, with the difference being that the first Trump administration didn't expect to win and therefore had no idea what it would do in the first 100 days. Right? There was lots of different stuff to do, but they didn't know who to do it, and so they chose largely establishment candidates for appointments. This time around, they expected to win. They had an incredibly effective first 100 days. If you remember, the Democrats were basically scrambling on what in the heck is going on. They had no idea how to offset the push that came through. Now it feels like the administration is headed in the same direction that it did in the first administration, which is basically losing energy to corruption and grift as it moves forward.
Spot on.
And wow. My hunch is you will continue to see the talented members of this administration leave. We'll eventually be left with the incredibly untalented Trump sons. And at some point, the opposition will figure out the appropriate way to handle that. And history suggests that, this does not end well for the Trump family.
Yeah. That's probably accurate. Yeah. I'm not touching that, JD.
I'm not touching it.
No, it's perfect.
Oh man, that's perfect. Okay.
Well, we'll touch it in a way that I couldn't agree more. You know what I mean? He's not fulfilling. He got caught on not fulfilling any of the promises that he campaigned on. The Epstein thing is a big deal. You know what I mean? I think that's absolutely crushing his popularity. And yeah, we're going to see how he wiggles out of it. I think losing.
Well, I would argue he's largely successfully wiggled out of it by saying Epstein who. I don't even understand what people are talking about.
Wiggled out of that.
Right?
Yeah, no, that he's wiggled out of successfully, no doubt. I feel like losing Tulsi Gabbard, who had a lot of momentum, uncovering a lot of stuff, is a disaster. Like I felt like she was the one that was going to keep the ball rolling in the America First direction, and losing her is not good.
Yeah, I mean, look, I think we made a somewhat calculated move. When you considered the opposition, it was so non-America first that it would be very hard for me to advise anyone to vote for the Democratic Party as it was constituted in 2024. Mm-hmm. We didn't actually know who was in charge. Nobody believed it was Kamala. We certainly didn't believe it was Joe Biden. We discovered afterwards that we were correct, but nobody has actually pointed to Kamala as well. That was the person actually in charge, because nobody wants to accept responsibility for the Biden administration at this point. The Trump administration is proving to head down the same direction. The difference is that there's at least an element of America First that caused people to say, maybe we should consider this direction. I think what we accepted was that there was an element of Trump first, America second, but that was better than America last. And now it's getting hard because the Trump first part is getting really absurd.
It is absurd. This is the one thing that I had never thought I would see, is the level of in-your-face financial, monetary corruption that's taken place. I thought
the critical thing that I would highlight, Tony, is what are you actually going to do about it?
Exactly.
Are you going to write your senator? Are you going to write your congressman? Are you going to refuse to vote? Are you going to leave the country? Are you going to take up arms?
No, I'm
my guess is none of the above, and that's not a criticism of you. I fall somewhat into the same camp, saying how much can we actually do at this stage? And it's very hard.
I know two things that I know: how to observe power, right? Like, that's sheer power for the sake of power. That's something that we've been witnessing in this country for years. And then the Steve Cohen slogan that has really helped turn my attitude around about what we're going to do about it. The answer is, what you're going to do about it is nothing. But the slogan that he says is, look, man, I got to live in this world, right? And if you think about things like that, it's like, no, you're not going to go get your pitchfork and march on Washington, but the whole market is out here, and you can still make moves out there in response to whatever you think is coming. And so I feel like that's basically the only choice that we have, and I'm resigned to it, man. I'm like, I'm back down to Steve Cohen's line. I got to live in this world, so we got to figure it out.
Yeah, there is some frustration. You do cross over a point when you're Steve Cohen where I do think you actually probably should be speaking truth to power, but I also understand that he has far more material at risk on the chessboard than I have. But that actually is a really critical point, right? We can't just leave it to the people who have nothing to lose to actually raise their voices. And
that's the takeaway quote from the day right there. That's the takeaway quote from the day.
Totally.
You can't leave it to people who have nothing to lose.
Yeah. And that is actually the entire point. That's why voting was originally linked to those who owned property, right? You wanted to actually have the vote carry consequence as to your, what you have at risk. We've emancipated everybody in the United States to the point that in this last election, not the last one, the one before COVID, we seriously considered emancipating 16-year-olds. We were thinking about giving 16-year-olds the vote. Think how crazy and stupid that is.
Yeah, man, wow.
Right? And the process of emancipation is just a function of selling access and selling, power. That's how it's always played out, right? If somebody's offering you the right to vote, they expect you to vote with them. And it's an attempt at unseating, power combinations that exist. I don't know what happens from here, but my hunch is that democracy, as we actually think about it, is not long for the United States.
Yeah. That seems accurate. JD's been saying that for a decade now, and I didn't believe him at first, but I can now I certainly do. It feels like a lot of the writing is on the wall. All right, guys, I think that we covered everything. The three of us could sit here for the next 12 hours and hash stuff out, but I want to have a fun conversation about off-market topics. I saw on Twitter, Robert Plant answered the questions, things that I love and things that I hate. And I thought it would be fun to ask Mike Green and Jared Dillian to riff on that for a little bit. And why don't we start with JD and give us 3 of the things that you love? And we asked everybody to keep it light, right? We're not going deathmatch political.
I want to start with the things that I hate.
Let's start with the things that you hate. Let's hear a couple of them.
I hate non sequiturs. Okay, so what I mean by that is I'm sitting there and I get a text.
You mean like Vegas DJing?
No. No, like I'm getting. So I'll tell you a story. A couple years ago, I was in Hooters in Myrtle Beach, and I get a text.
This is another humble brag story. Holy crap! Okay.
Another one. Jesus.
Tony, you know this guy. I get a text from this guy, and it just says "fire" in all caps.
Oh God!
And I'm like, is my house on fire? I'm looking at the security cameras, like I'm looking to see if the cats are okay. I'm like, a fire? Where? What's going on? So I reply back. I'm like, what the hell are you talking about? He didn't respond for 24 hours. So apparently what it was he was listening to one of my DJ mixes from 2 years ago, which started with a sound effect of crackling fire.
Jesus.
And he just says fire in the text. Dude, if you're writing an email or a text or something like that, there has to be context. I have to know what you're talking about. You just can't lob in like random shit,
Very good.
I like it.
Mike, give me something you hate.
Gratuitous honking.
Oh man. That'll ruin a neighborhood vibe, right? In a heartbeat.
When I lived in New York City, I used to fantasize, like, you think about what is the superhero power that you wanted. I wanted to be the vigilante justice for people who honk their horns unnecessarily. My superpower.
How are you going to penalize them?
Well, so the first was simply a warning, right? I could teleport into their passenger seat and say, don't do that again. And if they did it again, man, then it went Punisher.
I like that, especially with the movie Citizen Vigilante making the rounds. That is an excellent movie, and I recommend it to people. One of the things I hate is excessive movie violence.
Oh, yeah.
For whatever reason, in my lifetime, movies have gone from using violence to shake you up to become something that's totally like the theme of the movie, and that's just something like I can't even watch for whatever reason.
I have never watched a Tarantino movie. Never. I've not watched one. I'm dead serious. I can't handle it.
Kill Bill is the poster child for irrelevant, excessive movie violence, right? I mean, there's an entire half hour where people just get shot up and bleed all over the place.
Oh man, I'm gonna have to take the other side on that one on Tarantino. So he's produced some extraordinary stuff. Where I do agree with you. Like if you've seen the recent series like The Boys and stuff like that, dude, those are just terrible. Like,
yeah. I started watching a series that was about, the English gangs, and I forgot what the name of it was, but I watched like 1.5 of them, and I was like, I can't take people having their throats slit, getting killed like this. Like, that stuff doesn't fly with me. Like, that just propels me in the other direction. It kills me. JD, give us something you love. I mean, or a couple things.
Music, DJing.
More specific.
More specific?
Yeah.
There is a track which I've had on repeat. It came out in October of 2025. It's produced by a guy named Hessian, and the vocalist is Courtney Storm, and it's called Heartbeat. And I literally, if you look at my iTunes, this track has like 300 plays. Like I've just played it over and over and over again. You can find it on YouTube. It's very progressive. It's so good I can't even play it out because it's just it just like it doesn't fit with anything. It's just so good. So that's like my favorite track of the moment.
Wait, what's the name of the track again? Say it one more time.
Heartbeat, and it's by Hessian featuring Courtney Storm.
Well, we're all going to search that one up. I wish we could play that for everybody right now. And one of my things that I love in the music line is astounding stereo quality. You know, I forgot how happy it makes me. I just got a ride in my buddy JB's 7 Series BMW, and the sound system in there was like club level awesome.
Oh, yeah.
I was like, man, this must make you so happy to drive around Florida in this monster with this unbelievable. Like, I would look forward to get into my car.
Yeah.
I would not give a shit about traffic. Like, I would just be so happy to sit here and listen to amazing musical quality. It puts a smile on my face. Do you have something along the music line that makes you happy, Mike Green?
Yeah, actually. So my daughter, who is 23 years old, was raised in the whole iPod era. And as a result, and iTunes, etc., and as a result, she has an encyclopedic and extraordinarily broad range of music knowledge that has created an entire vocabulary where we'll just send each other songs. And we'll actually talk about music and things like that. And that would fall into the category of you know, what I truly love, which is just human potential. I think there's such an extraordinary gift that we've all been given by the opportunity to be here and take advantage of the fact that we get to learn really crazy and odd shit, like Heartbeat by Hessian with, Courtney Storm as the singer.
Really cool. I'll throw in one more that's on my list that's on a similar line. You know, we both have multiple children, and one of the things that makes me happiest in this world is the bond between my children that excludes the parents. Like, my 3 kids are Irish triplets. I have like a 19-year-old, a 21-year-old, and a 23-year-old. And they are closer than you can't get between the wallpaper and the wall. And sometimes it's to my detriment. You know, definitely there's times I know they're ganging up being, dad's being an asshole right now. But for the most part, I am blown away, and nothing makes me happier than their unbelievable bond. Something like that.
That's really cool. My children are not all that dissimilar. We also had 3 under the age of 4 at one point. Kudos to my wife, who I also love, but kudos to my wife for being able to handle that and push through it. But the unique thing about that is that they all grow up with a very similar experience, right? If there's a 12-year gap between your kids, like mom and dad are unrecognizable over that 12-year period.
Totally.
Jam it all together, create the chaos of multiple kids, and all of a sudden you realize, man, I was totally out of control for that 5-year stretch when they were born and only slowly regained it, and now I regret that it's gone.
Yeah, it was a blur. Like that period of time of that, my kids as toddlers was a complete blur, and I think it's a testament of how frantic your life is for that short period of time, and how little time you get to yourself. There's no time to reflect during that period of your life. It's just nose down and get everything done and wake up tomorrow and do it again.
Yep.
So that is the way it goes. Man, JD, do you have anything else you want to add?
I don't. This has been fantastic.
It's been amazing. We covered so much ground. Mike, I can't thank you enough for joining us. This was one of our best conversations that we've had. Tell our audience where they can come and follow you if they don't already.
Well, the easiest way to find me is at Simplify's website, www.simplify.us. If that is not enough, and I can't imagine why it wouldn't be, you can also find my Substack at yesigiveafig.com. That's where you'll find my longer form writings. And then on Twitter, I'm at ProfPlum99. And as I like to joke to people, it's easier to find me than to not find me at this point. I feel very overexposed in the media, but I appreciate it. So
that's okay. You do a great job, and you're always worth listening to. So that's worth it, and we'll have all of the links to all of your places there. Why Professor Plum as your handle? Just out of curiosity. Big Clue fan?
Actually, so in the very early days of email, you could actually pick your Unix email handle, and I was starting a PhD program, and Professor Plum, or Dr. Green, I'm sorry, would have been extraordinarily presumptuous, but Professor Plum was a fun way to play on Dr. Green from the game Clue, and simply say, well,
you could have been Colonel Mustard.
I could have been Colonel Mustard. That is true. The problem is that when I was 5 years old, at the lunch table, somebody pointed out that mustard looked like diarrhea, and so I've never really been a huge fan. So anyway, that's where Prof Plum comes from.
Oh, that's amazing, man. Well, thanks for sharing all of that with us. Thank you for liking and subscribing our podcast. Thank you for signing up for the Macro Dirt Dual Sub. And Mike Green, thank you for being here. We will have you back on again.
I appreciate it.
Keep on working, living, taking, giving, everybody, and we'll see you next week.